Hello and welcome. You're watching The Mint, and I'm Abhishek Singh. Markets across the world are bleeding. In this special broadcast, we will tell you why and whether this is the time to buy the dip or to stay put. Now, the decline was especially pronounced in Japan. The Nikkei index fell 12.4%. It was the index's biggest one-day point decline in biggest intraday fall in Japanese markets in 37 years. India is doing no better. To help us figure out why this is happening, I'm joined by Sonam Srivastava. Sonam, thank you so much for joining us.
Thank you for having me.
Sonam, the markets, the global markets, whether it is the Nikkei, it's the European index, or of course, the Indian markets,
Mhm.
everything is in red. And what will you attribute this to?
See, I think a couple of factors, right? Number one was the news that came out from the US that the employment numbers were quite low, and that has sort of increased the fear of recession in the US. So there was fear there, and secondly, Japan, right? Japan is the lowest interest geography, and there's a lot of carry trade that happens. People borrow from the yen and invest in riskier assets. Now that Japan itself has raised the rates, that could lead to a lot of upheaval in the global market. People will unwind some of the risk assets, right? Because Japan has now raised the rates and a lot of carried rates will be broken. So it could have some implication on the global supply chain demand, right?
Right. And the fear of recession in the US, of course, this was triggered by the job report, which was published on Friday. The numbers came out. And since then, we're seeing the effect of it on global markets. As per the report, the unemployment rate jumped to near a 3 year high of 4.3% last month against 4.1% in June in the US. Now, how do you link this to what's happening in rest of the world?
See, I think the recession fear in the US definitely would have a longer term implication on the global markets, right? I think the US was raising rates because they thought that they could control inflation by high rates, but the only fear here, Abhishek, was that they keep the rates high for such a long time that the economy goes into recession, right? They don't cut it in due time, and I think these are the signs, right, that the economy might have actually suffered more than it should have. And if recession fears happen in the US is the primary sort of market of the whole world, right? So it should have longer term implication to the global markets, right? It should have implications happening to countries like India, which do not hold a lot of, you know, whose fiscal situation is not as strong as the US or some of the developing countries. So the risk could be higher with us, right? So I think, there could be longer term implications if something happens.
Before we start talking about the Indian markets and what is happening today, because the market's still on, it's 2 p.m. We're still about hour and a half before the market shuts. Let's talk a little bit more about the US markets. Now, as far as the recession fears are concerned and what happened as far as the jobs report is concerned, some are seeing this as the fact that this could lead to rate cut by the US Fed this year. Are you also of the opinion that the Fed might cut rate?
No, I think it seems like a surety that the rate cuts are going to come in September until unless, let's say inflation also doesn't go down, then that would be a very difficult situation. But I think inflation seems to be under control in the US. So people are expecting, I think JP Morgan sort of said that they expect a 50 basis point in September, December, both. I think other banks have expected 25 basis point cuts. I think some are even expecting Fed to come back in before
100.
September end. Yeah. No, some people expect
Yeah.
ki the
Some are
rate
even
cuts to
saying 100
happen.
BPS.
Yeah, and even before September, people expect cuts to happen, right? So we do expect rate cuts to definitely come soon.
Right. And also, of course, what's happening in the Middle East, the fear of an escalation in the war, the conflict which is going on currently between Israel and, of course, Hezbollah, Hamas, and Iran. So, any escalation in that is also going to have an impact on the markets.
No, definitely. See, if things escalate in the geopolitics and other countries are sort of involved, right? I would assume Iran, Russia, Turkey, various geography was will get involved, and that will have implication on the global trade, right? Various commodities, various ports will get impacted, and that will have impact on the markets as well. And obviously, it doesn't help the sentiment at all, right? So I think three big reasons which are leading to this bleed in the market. So 2.5% correction for so many reasons is not that bad, I would assume.
It's not that bad. I mean, I'm looking at various indices. Now let's come back to the Indian markets a little bit. I'm looking at the energy index. It's 1,600 points down. The Nifty Bank is also sort of down by more than 1,200 points. It at one point in time even breached the 49,900 mark.
Right.
So when you look at this dip, I mean, you just called it that. Okay, this is a reasonable pullback, if
Mm.
not really a crash. Then would you say that this is a time for people to get in and buy, because a lot of people could not get in at the right time and at right levels perhaps?
No, I would, will not surely come out and say that today is the right time to buy. Even many of my clients are coming back and asking me to invest today, but in fact, we are playing it a little bit safe because like you see, that there are three big reasons that are leading to the crash, right? And there could be more volatility, right? See, the Japan trade would impact the whole global trade, and you could see certain systemic risk come out if something happens. So we have to be cautious, and I would assume let's the prices settle, let us get a good breakout from the deeper correction, and then let's invest, right?
Yeah, the interesting thing is, while the markets around us were falling, Indian markets somehow were sort of staying in the upper band, and
Right.
now that's not the case anymore.
Right. No, I think today's reaction was expected, right? Everybody expected the market to open on the negative, and we're seeing all the geographies. Nobody is spared, right? Everybody's seeing correction. Japan closed 13% down. It's down almost 20
Yeah.
25% from a week ago. So obviously, it will have implications outside, right?
And now is also the time when people are doing a lot of post facto rationalization.
Mhm.
Everybody's talking about how the valuations were stretched, but if they were stretched, they were not stretched, I mean, in just 24
Right.
hours. They've been stretched for a while, right? And then of course the unimpressive Q1 results. So now the rationalization is happening, but to what extent do you think the stretched valuation were responsible for this, or the unimpressive Q1 results?
No, I think Q1 hasn't been that bad, I would say, right? I think we were expecting the numbers to be low, and there have been certain companies which have done decently well, especially if you look at the capital market, you look at the agrochemicals, right? Consumption-led stocks have
Right.
done quite stably well, and there have been bright spots. I think today it's just a correction, and things are. Anything that was up is coming down, but yeah, there were pockets which are extremely overvalued. Anything that's trading at 200 PE will not
Yeah.
will not be positive today, right? For sure. So obviously I don't think this is see, valuation certain pockets definitely is a concern, but look at other pockets, look at your banks, look at your for example, chemicals, agrochemicals, agriculture, consumption themes. You're still sitting on very good valuation, right? So I don't think the market as a whole will correct on valuation. Certain pockets definitely could correct, right?
Right. But talking about the PE, the Nifty 50 PE is 23.1, which
Mm,
is above its 2-year average of 21.9.
mm,
The index PB, which is the price to book ratio, is at 4.17, which is also slightly above the 2-year average of
correct.
4.09. So, looking at these numbers, what do you see going forward? You still see this as a pullback, not really as a crash, which is what the headlines are going to be, considering the fall is, I mean, the candle is rather large.
Right. Right. No, I think it's a pullback, and it could turn into a
Okay.
crash. Right. We cannot be sure because there are a lot of big global events happening. But yeah, I think the valuations on the Nifty, right, like you said, from where we're trading, the upper band itself could go to 27, 28. I was talking to somebody few last week, right? So on the upper band, we still had a lot of scope to grow, right? We were not in the extremely overvalued zone. We were obviously trading above the average, right? So I don't think on the Nifty level there was like some this big huge valuation concern, But yeah, I think the market is taking note of what's happening in the global economy, and we have to see how things sort of pan out from here, right?
Right. And talking about technicals, Nifty 50 is now trading below the 20-day moving average.
No, no, I think that's a big concern, right? I think it has also
Yeah.
breached the lower Bollinger Band. I think that's where it has found support, right? So I think Nifty has sort of found
Yeah.
support at where it is, and there could be a bounce back from here. But again, we have to be very very aware of what's happening in the global market, right? For example, Japan crashed 13%. You look at cryptocurrencies, Bitcoin and Ethereum; these have crashed 15-20%, right? There seems to be big trades happening, so we have to be cautious, right? We can't just be very very sure about the support levels right now.
Do you, at this point in time, think that people should just sit back, wait and watch, or start taking positions?
See, I think it's a very interesting time to pick up on the stocks where the earning momentum is happening. Right. So, for example, look at the capital market team, CDSL, CAMS, Nuama, all of these players have come up with such strong earnings, and the trend seems to be strong. So, if you're getting these stocks cheap, why don't buy it? Similarly, I think there's going to be a pivot from high momentum stocks to value stocks right now. I think that pivot seems to be happening, right? And if we can sort of recognize that and go to slightly undervalued names, maybe from the defensive themes, I think that could be a good place to buy these stocks, right? So we have to wait and watch, because certain large global economic scenario is sort of impacting the market. But yeah, there are certain pockets where once the market stabilizes, there would be a great opportunity to buy.
All right, so wait and watch for the time being. However, wherever possible, if you see an opportunity, small positions can be taken. All right, that was we needed that kind of clarification. We needed it from an expert. So thank you so much, Sonam, for joining us and clarifying all of these issues for us. Thank you.
Thanks a lot. Thank you.